Greetings, fellow investors. It's been a rough market for income seekers this year, and chances are you've heard the conventional wisdom that it's about to get a whole lot more difficult when the Federal Reserve finally starts raising interest rates for the first time in nearly 10 years. But here's something I'll bet you didn't know. The Fed's next interest rate increase will be bullish for dividend-paying utility stocks. You heard that right. The last tightening cycle lasted from June 2004 to June 2006. Over that time, the Fed raised its key Fed funds rate from 1% to 5.25%. And utility stocks? Why, the Dow Jones Utility Average had one of its most profitable two-year runs in history, a total return of nearly 60%. That was actually 4 times what the S&P 500 index earned. Surprised? Well, it's a fact. The last time the Fed started raising interest rates was one of the best times in recent memory to buy utility stocks. In fact, when the Fed stopped raising rates, utilities were already most of the way to their early 2008 peak. In 2004, the Fed was launching a tightening cycle less than 2 years into a bull market. This time around, it's been more than 6 years since the bottom. So the results might well be different for the overall stock market this time. But what is clear is that conventional wisdom about utility stocks and Fed tightening is just flat out wrong. And those who sell good utilities now are going to regret it, and a lot sooner than they think. Did you know that since early July, the Dow Jones Utility Average has climbed nearly 10%? That's already money in the bank for readers of my advisory, Conrad's Utility Investor. Look, I'm not recommending you go out and buy just any utility stock, and I certainly don't advise buying any of the popular exchange-traded funds or ETFs, which basically guarantee you'll own the sector's worst companies, as well as the good ones. But Conrad's Utility Investor readers who heeded my advice from the June issue to buy CMS Energy are already more than 12% richer. This Michigan utility is truly on a roll, raising its dividends 7.4% this year already, and with an opportunity to invest $20 billion more in its regulated utility system over the next 5 to 10 years. There's plenty more where that came from. From late January of this year until early June, CMS stock fell nearly 20%. Its only crime being a utility at a time when the conventional wisdom was to sell utility stocks. We saw value then and took advantage. My current issue of CUI highlights another super high quality utility that's growing even faster. 15% plus annual dividend growth between now and the end of 2020. But it's actually selling for 20% less than it did in June. It's clearly a victim of the same wrong-headed selling, and it's ripe for the picking. You might be asking yourself why more investment opinion makers aren't bullish on utilities now. As the owner of a small but proud investment firm, I can assure you it isn't because they have fewer resources than we do. The Wells Fargos and Morningstars of the world can access the same Bloomberg research I do, and they have armies of analysts to go over reams and reams of data. Being small, however, does give us at Conrad's Utility Investor 3 huge advantages over the big houses, as well as over our much larger competitors in the investment newsletter business. First, we don't have the groupthink that seems to plague large organizations. That makes it a lot easier for us to attack the conventional wisdom and take advantage of it. Second, the owners of this organization, including yours truly, have to work for a living, and there's nothing like crunching the numbers yourself to get the real read on what's happening, from individual companies' health and prospects to a ground floor perspective on big picture trends. Last, but certainly not least, what we lack in numbers, we more than make up for with experience. I've been following CMS Energy since the mid-1980s. Try finding an investment newsletter advisor, or even an industry analyst or fund manager who comes anywhere close to that. Look, when you subscribe to Conrad's Utility Investor, you get perspective you won't find anywhere else. And that's the difference between making and losing money in the 7th year of an historic bull market, when timing is as critical as identifying quality stocks. Click on the green button below to find out more. And thanks very much for listening.